Patrick, we have charts that show the Japanification of Japan. It's been there. We're not going to fault the exiting emperor for that, but the reality is it's wrapped around subdued nominal GDP, interesting population dynamics. Can you invest in Japan given their gross macro, cultural, and social issues?
You can, because it's an exporting country as well. And I think Korea, Germany, and Japan have all had a probably very terrible Q1. And I actually think as global trade, we expect that to pick up for the remainder of the year. We think those countries are going to be beneficiaries of that. So Japan, not so much on the domestic situation, but as an exporting country. And corporate governance over the last 2 and 3 years has really improved in Japan. Cross-shareholdings, things like that, and more of an emphasis on returns for equity holders is something that's going to provide a bit of a tailwind. So not driven by domestic demand in Japan, but other factors.
Antonio, overall, with hindsight, what should Governor Kuroda have done differently in Japan?
That's a very good question. I think, look, in many ways, the hands were tied. I think there was the issue of delaying too much the cleanup of the banking system. I think the negative rates, indeed, is an issue for banks because it sends a really bad signal. It sends a very bad signal when you're also trying to give forward guidance to could actually bring your rates even lower because you see in the situation you're not able to move out of there. So I think, look, probably more coordination between monetary and fiscal would have been better. But this is not something that is in the hands only of the governor of the central bank. And I think, historians will say, but I think the negative rate policy is something that has a lot of cons as well that perhaps hasn't been fully appreciated when the central bankers launched it.
Where do you see, do you see value, Patrick, in Japanese equities?
I do, actually, and it's...
But you have for a while.
Well, it's just started this year. So we haven't held Japan for a long time. We started buying it in February, and it's the one region that's showing up as very good value. On price to earnings, most markets are trading at 60th to 80th percentile on their own averages. Japan's at its 4th percentile right now. It's never been cheaper than it is today on earnings. On price to book, EV to EBITDA, it's quite cheap as well. So a lot of the reasons Tom's already mentioned about the impacts of the economy and the demographics of Japan aren't good news. But just on valuation, very good. Even on dividend yield, you look at negative interest rates in Japan, you're getting almost 2% dividend yield in Japan right now. So on value, Japan does stick out.